I'm Prahlad Pant.
And I'm Ruehle.
We are from East Grand Rapids High School in Grand Rapids, Michigan. Our company is Intel, and we recommend for you to buy immediately. Intel, or known by the ticker INTC on the New York Stock Exchange, is worth $49.20 as of April 4th. However, we feel that it is tremendously undervalued. So Intel has historically been a processing company. However, they're known for so much more today. They manufacture semiconductors, they produce CPUs, they create GPUs, and they are one of the largest US-based manufacturing for semiconductors. They also license many important technologies like the Thunderbolt and x86.
Intel has very strong ESG considerations, and they have a plan called Intel 2030, where they plan to be energy neutral, water neutral, and landfill neutral by 2030, and they have the ability to do that because they control their own production. They have a strong social initiative in terms of increasing diversity in employment, both racial and gender diversity in their offices, and they have helped with pandemic assistance over the past 2 years. And their company is led by a CEO who is an engineer following an industry trend and who was known as America's best CEO. And so far, information coming out of the company is saying that he's doing a very good job at changing company culture and working towards a growth-minded attitude. They're in a unique position in the industry because they have varied revenue from multiple sources. They have large cash resources to make the investments that their CEO is arguing for without taking on debt. They are in a high growth industry, which is experiencing multiple double-digit growth year over year for the foreseeable future. They are currently greatly undervalued because their growth potential and their large cash reserves are not being taken into account in their current value, and they have a strong plan to grow in the next decade. Their competitors are AMD in the CPU space, AMD and NVIDIA in the GPU space, which they're planning to enter soon, and Apple to an extent, but they can also be a customer if they are able to sell them fabrication. And their main competitors in the fabrication space are Taiwanese-based manufacturers who make up 60% of the global market, and domestically that they compete with global foundries, but they have diverse locations unlike any of their competitors, giving them a geopolitical advantage. In terms of fortified forces, Intel, none of these serve a particular threat towards Intel because in terms of industry competition, they tackle more areas of the industry than any of their competitors, giving them protection. Suppliers don't have a large effect on Intel because mostly they purchase raw materials, so they cannot be threatened by a particular supplier. New entrants can't really enter the semiconductor space because it's so expensive to enter. Customers have very little power over Intel because, as Pat Gelsinger said, fabs are essentially the new oil, meaning that no matter how much any company or country doesn't want to purchase them at whatever price they're at, they need them to keep running. So they're going to continue to purchase from Intel. And there's very little threat of substitutes because as a fabricator, they can produce for the new products or they can license those new products and just produce them themselves.
Pat Gelsinger has laid out 4 superpowers that he believes Intel has. These are pervasive connectivity, cloud to edge, AI, and ubiquitous compute. Pervasive connectivity is the next level of Internet of Things, where there's this network of physical objects that can communicate and exchange data with each other. Cloud to edge is when computing occurs at the edge rather than the cloud. If you think of this as spider web, the cloud is at the very center, whereas the edge is the border of the spider web. When computing happens at the edge, it is much faster and the latency is much lower. AI is rapidly advancing. However, we lack very transparent AI or AI that is explainable. Intel wants to invest in solving this problem because it will help understand many of the biases AI has when it comes to race and gender. Ubiquitous compute is when many non-traditional devices can have the ability to compute, such as cars with smart cars, fridges, ovens. This will only increase as more and more just objects are able to have the ability to gather data, collect data, transfer data, and compute data.
We believe that Intel has numerous advantages over other companies in the space, and that starts with Intel's new leadership. They have a new CEO, Pat Gelsinger, who was brought in February of 2021. And in less than a year there, he has massively shifted the company's goals towards long-term growth. And he was named America's best CEO, as we mentioned before. And he transformed Intel at the very beginning of its existence by developing foundational technologies and transformed VMware into a leader in the AI space. He's growth-minded, making strategic investments, trying to model the success AMD saw in the 2010s when they experienced over 6,000% growth due to long-term investments they made. And he's an engineer, so he understands the product and the investments that need to be made, and he's able to be more strategic in the decisions because he understands the development timeline. They also have a diverse business model. They fabricate, design, and sell their own products. But they can fabricate because they're one of the only companies in the United States with large fabrication facilities, so they can produce for other companies. They can design technologies like x86 and Thunderbolt and license those to other companies that they need to use. And then they can sell their own products under their own brands, like the Intel Core and soon to be Intel Arc, and they can sell that to retail, OEMs like Dell, and to data centers.
So one strength of Intel is it has a very concrete growth plan, which we can't say for many other companies. Intel's revenue sources for Q4 2021 are shown right here. They earn $10 billion from traditional retail sales. This will only grow as they get into the GPU market. They earn $7.3 billion from data centers, which again will grow as data is just a commodity that more and more companies need, and storage of this data is very important. And finally, what we think is most notable is they earn $800 million from their fabrication service. Intel Foundry Services will only create at the start of 2021. So the fact that it is already having a revenue close to $1 billion is very notable. And Intel has recognized this and has committed to investing more into this part of their business. Three main areas where we think Intel is planning to grow are the GPUs, CPUs, and fabrication. For GPUs, they're planning to release Arc, where they will compete with AMD and NVIDIA. The graphics market has tremendous demand right now, and Intel wants to capitalize on this. CPUs are Intel's traditional business for many, many years, but Intel recognizes that they need to maintain their position as the industry leader, and so they're investing more into improving their CPUs. For fabrication, they recognize that this has a lot of potential to grow, especially with geopolitical interests where US companies and European companies want fabrication to be done domestically for stability reasons. And so Intel is investing many billions. Intel is investing $200 billion over the next 10 years into their foundry construction, and they've already spent $6 billion to acquire Tower Semiconductor, which is an Israeli company. Pat Gelsinger also recognizes that Intel needs to maintain their reputation as an industry leader, and as such, he's invested $15 billion into research and development. Customers will only come when they see that a company is giving the best of the best, and Pat Gelsinger knows for this to happen, he needs to invest more in research and development.
To develop a price estimate for Intel, we took a look at their current cash flow, which we think is their largest asset, and used a discounted cash flow model to predict its intrinsic value today, which we found at around $118 per share, which lines up with our prediction that Intel's large revenue, large growth, and large cash flow contribute to it being massively undervalued today. But in terms of developing a price target for 2028, we used the discounted cash flow model again and used industry predictions for growth, which largely scaled after 2025 because that's when Intel will be opening massive revenue streams with its fab business. And we got a target price of $148 by 2028, which is around 200% growth. This may seem a bit high, but compared to other semiconductor space, which is very profitable and very quick growing, other companies like AMD and NVIDIA have seen massive multiple 100% growth in just around 5 years because of strategic investments they made in the long term.
So we expect revenue to reach about $130 billion, which will greatly outperform their industry competitors. This is due to their focus on long-term investments. So Intel has had a very concrete growth plan. This is beginning from their new CEO appointment in February of 2021, all the way to their goal to reach 10 to 12% growth in 2025.
Overall, we believe that Intel has massive growth potential because it's entering the GPU market right now, opening a new revenue stream. It's greatly expanding in the fabrication market, which has a massive potential to turn a huge profit for them. They have a diversified revenue stream through retail sale of GPUs, CPUs, of technologies, and in fabrication. Their strategies line up with geopolitical interests, with moving fabrication domestically, especially to countries in the United States, in North America and Europe. And they have large cash flow and cash flow margins that they can use to finance these developments without taking on burdensome debt.
Thank you so much for listening, and please reach out if you have any questions.